Okay, welcome back, guys. Good evening. I hope you can hear me clearly now with this content. Basically, this is Sunday, which is what's today's date? Which is third of May, of March. Oh my God, let me. Okay, sorry guys, that was a call, and sorry, that was a call, and I'm back. What I'm actually saying is that I'm redoing this video in the favor of video that I created, which I got a complaint that there was no audio, right? So it was actually a fault from my computer, and I never knew that the audio is mute, and I was recording. I promised to redo it on Saturday, but my phone got blank, so we are back into it. And if you are watching this video and you have not watched the weekly recap, I bet you go back and watch my weekly and monthly view. That will enhance and that will strengthen you to know what I'm actually saying on this content, because every ideas and everything I'm going to be saying is going to reference back to that. All right, because I'm now focusing my views based on my monthly and weekly analysis. So that being said, we just dive right into what we have, so we don't waste much time. All right. Let's go. The Euro US dollar daily contract for Friday, right? This is a weekly contract, so let's go on daily. All right, I don't want to confuse you. Right, this is the daily contract. While I read my statement, the Euro US dollar daily contract for Friday, 1st March 2024 contract deliver as an insider bar candle that end in a bullish day candle. That's a bullish candle, but it's an insider bar candle that did not take either buy side nor sell side liquidity, right? And I am very pleased to be wrong with the previous price prediction, which is Thursday price prediction. I was wrong about that prediction, and I'm very pleased that I'm very pleased to be wrong with the price prediction for that day, for that trading day. Though I keep referring to the 4 hour bullish what breaker instead of the word centralizing my view on the weekly inversion fair value gap, which was a great factor in price and a major reason price remain above it, even though price retraced into it several times, leading to what lower time frame what relative equal lows. Now, what do I teach you guys? I told you guys that every low, every equal lows need to be swept, right? We need to sweep every equal low. But now, if you go on a lower time frame, like the hourly and uh, the hourly and 15-minute contract on Euro, you definitely going to realize that there is a relative equal load that hasn't been swept, right? And on a normal instance, if we are to deliver higher prices, we are supposed to sweep that low. But now we did not sweep that low because the higher time frame PDR raise is opposing that price should not go down there, right? So that is where I'm supposed to centralize my ideas based on the what weekly inversion fair value gap instead of what focusing more on the lower time frame. That's where I was wrong, and I think I had to learn from that as well, from that point of view as well. And if you can see that on the weekly fair value gap is actually very integrating with what the monthly bullish order block. Now, my month, sorry, my daily bullish order block, not monthly. I'm really sorry to say monthly, right? Daily bullish order block. If you look at this two down close candle, is a bullish, it's a consequent or a consequently what bullish candle, bullish candle. And if you can see, market retest on the high of that candle. Let me just put a line, right? You can see how Euro is sitting on top of the high of the what of the bullish bullish candle. So imagine having two PDRAs supporting a particular set of move on in price. That makes it what very very strengthy. Now, normally I used to say casting forward, but now I have changed that language. You know what? I change it to something like this. All right. So I am sorry. If euro now, normally I used to say casting forward, but now I will say that word. If euro find its way, because if I'm saying casting forward, I think that that is also another language that's so strong, right? It's so strong. But let's see. If euro find its way to find its way higher, which is a bullish slash weekly. Now, when I was recording that video, I did mention that word bullish daily on weekly. That means my weekly profile next week is bullish, but every day I'm going to look for a bullish PDRA that support my move towards the upside. Now, that support what the bullish the bullish weekly or and daily contract conditioning, uh, condition, meaning that I favor more buy side liquidity than sell side liquidity. Reason is that the weak inversion fair value gap has already keep price above it for days, showing its strong effect in price. More entry Okay, sorry, my entry will be based on the trading day and time based what setup. That is, I'm going to see what the market is conditioning for me, and I'm going to work with that going in or tomorrow, right? Either this week, tomorrow, or whatever. But I'm going to condition my eyes and my ideas based on these certain parameters that's going to form, or that is going to what come out in price. That's it for the euro. Let's go to the dollar index. Okay, so also on the dollar index, we can see that the daily contract, now this is where SMT divergence has happened. On the dollar index, there is a sweep of liquidity, which is buy side liquidity, that is going to deliver price lower. Now, for as price has already been swept, which is the buy side liquidity for euro has already been swept, that's going to engineer sell side delivery. That makes it what very, that is, we're not going to expect euro to price lower and sweep that sell side liquidity before we go higher. I don't know if you are getting what I'm trying to say, but because there is a divergence in price which has set the parameters or set the leg for a higher move on euro and what a lower move on the xy daily, I mean daily contract. So the xy, we have this word volume imbalance. See the volume imbalance high and the volume imbalance low. Now with these parameters, I am actually, now if the xy retest on the volume imbalance low, we are going to what have a net short position on that particular, we're going to expect a net short position on that price, right? So it's if the xy respect this volume imbalance, that is, there is a higher chance that the xy, sorry, that euro will not go and retest on its weekly inversion fair value gap, since the weekly inversion fair value gap is way far than what this, the distance. I'm trying to cover the distance in, that is the difference in the distance they have. This one, if we open, there is a high chance we're gonna just retest and continue, but that's why euro we have to what move a long way lower to go higher. And if the xy is not willing to move higher, then there is no going to be what a net short move on euro. All right, so sorry guys, that was just a breakup. So what I'm actually trying to explain here is that if the xy is going lower, then we are going to be what expecting euro to go higher on the daily contract. So that has bring me to the end of the daily contract for the xy. Let's go to what 4 hourly contract on euro before we talk about the xy. Okay, this is the 4 hourly contract on the xy, sorry, on euro. And what I'm actually looking out for on this daily contract on euro, I want to see the, sorry, on this 4 hourly contract on euro, I want to see euro price lower into the what, the fair value gap or BC. I don't want to put that on my chart, and you can actually see that. Let me add it because of content sake, right? Right. If you look closely, we have this fair value gap, which is buy side imbalance, sell side inefficiency, right? A bullish fair value gap, and also a bullish what order block. So which, because this bullish order block is below this inversion, this fair value gap, then I'm more interested in price retesting on this what bullish order block. So if we retest on that bullish order block, then it is going to also provide room for the XY to retest on the volume imbalance I just identified on the daily time frame. So with these parameters together, we're going to find what net position. Whenever price get to this area, we're going to find way to engage and buy euro US dollar. All right. So I think I have a statement for the 4 hourly contract. The euro US dollar 4 hourly contract shows nicely how algorithmic price delivery in Friday trading range. Now on the 4 hour, we can see that euro wick lower and accumulate orders for higher price delivery, which also show where which also show that we that which also show where I was wrong. Okay, sorry. Which also show where I was wrong from what Thursday price prediction, as the bearish order block was not respected. You know, on Thursday, if you go back and watch, I was looking for this two down close candle to be bearish, but forgetting my higher time frame bias. So I was wrong, and I'm actually going to what avoid that next time, going in next time. All right. So now the 9 o'clock a.m. New York local time 4 hourly candle sets a perfect buy program in Friday trading range. Casting forward, or using another language now, if euro find its way higher in price, I will be expecting, or I am anticipating for a short time lower price delivery that is going to accumulate orders for higher price what and for higher price delivery on euro. Now we're going to work our way into 1 hour and 15 minutes to see if there is any short time low that is likely to be swept before we go higher, because I will favor short time lows to be swept before higher price delivery. So let's go to the XY. Now this is the euro US dollar 4 hourly candle contract. All right, and I just pull up the charts, and if you also see a fair value gap, which is CB, sell side imbalance, buy side inefficiency on the what 4 hourly contract on the XY. So yeah, on the XY, we can see that clearly uh, showing in price. And with this, look at this buy side liquidity has been swept. That's what I was explaining earlier. We swept that buy side liquidity, which is relatively what equal highs, which is one, two, and three highs just been swept, and price what deliver lower. So what are we looking for? We're looking for this sell side, consequently this sell side, and if we continue going, we have this sell side. If time permits me, I would like to work on this hero very well, because I actually work on this hero. Now look at this buy side liquidity that market swept. Look at this buy side liquidity. Do you know that this price move higher was a Judas swing? A Judas swing, right? This price leg that move higher is a Judas swing to what? To sweep buy side liquidity before sell side delivery. If I had enough time, I want to explain something which will relate to what quarterly shifts and seasonal tendency. All right, but no time, and let's not bother ourselves with that. So let's go to the hourly contract for euro, so we can finish this up before 20 minutes. Okay, this is the hourly contract for euro US dollar, and you can see this is the 4 hourly fair inversion fair value gap, and also we have inside the 4 hour bullish order block I identified, we have a fair value gap on it. So I favor more what price to get to this point. And if you also measure this low to this high, you see that this particular PDRA is close to the 50%, which we want to be buying what at what discount and selling at what premium. That will give us an opportunity to buy at what discount price. Very, very, very important. So the euro US dollar hourly contract shows nicely the intraday price delivery for Friday, March 1st of March 2024. The daily profile is an obvious 9 o'clock a.m. New York local time as the low of the day that swept the London session lows and price rally higher. Now, the high of the day is formed at 2 o'clock a.m. New York local time that did not price above previous day high and fall short of the what buy side liquidity. On the hourly contract, we have a fair value gap of BC at the discount market price, which is what I just called for you guys. And also we can see how market is being what has been what rallying is being manipulated in both yesterday and today price action, which is the moves, sharp moves in price. Now, casting forward, or if euro find its way higher, I am anticipating for price to open next week, maybe price higher from the opening price and retrace into the what current range discount price, which will provide a net buy position for next week, and I'll be more confident with that price to buy to engage in. I hope this video is insightful, and if you enjoy this content, please subscribe, share this content with with share this with your families or friends. Anybody that you know that trade or that is a trader, please help me distribute these videos, this link, and I think that would be a very, very very, very great for me. So thank you for watching. Enjoy your day, and if you want to still sit, let's explain something nice before time collapse. Right, so what I want to just look out for, let's go to the XY. So this is the SY daily hourly contract. We can see almost same things happening. So if the SY find its way into this volume in fair value gap on an hourly contract, then we're going to what have our next short position at this price. All right. So this is a very, very sweet price delivery, and I hope, look at this buy side liquidity, equal low, equal highs, man. Nigga need to shine them eyes to see this thing play out perfectly, right? So I hope this has been very insightful, and I'm already, my throat is dry. I'm gonna take some water, but I hope I deliver something nice, something that can help you going in next month. This month, not next month, this month of March, and consequently this week, mostly because when we deliver this week, we're gonna use that sentiment to predict what next week's sentiment, which is also going to help us condition us to know what we're actually looking for this month. All right, so that is it basically, and see you anytime soon. See you tomorrow, right? Tomorrow is Monday, so see you by this time tomorrow.